Small caps have dominated Livewire's headlines for the past couple of months. Can you lay out the case for mid caps and why this part of the market deserves attention right now?
If you were to look at what we've seen over the last couple of decades, mid caps have actually been the strongest returning part of the market. But even when you break up the ASX 300 into three segments, the way we look at it is you have the ASX 50, so those top 50 companies, the mid cap 50, which are stocks 51 to 100, and then the small ords. If you were to break down those three parts of the market and we were to look at the return series over time, mid caps actually do generate the strongest returns. And how do we define that and how do we look at that? We look at it by looking at the median holding returns over the last 25 years. So for example, if we were to look at the last 25 years and look at the median holding return for those three different parts of the market, mid caps have actually sit right at the top of that. So let's take 3 years, for example. If you would have held the ASX Small Ords for exactly 3 years, the median return of that would have been 5.8%. If you had have held the ASX 50 for exactly 3 years, you would have generated the median holding return for that was 8.5%. And for the mid cap 50, the median holding 3-year return over the last 25 years, again, was 11.8%. So really quite strong. Now, what's interesting is if you increase that holding period to 5, 7, or 10 years, the story stays exactly the same. So what does that mean? It means the chances are if you held the mid-cap 50 for exactly 3, 5, 7 or 10 years, the chances are that you were holding the strongest part of the Aussie equity market.